Hello, my friends. This is Angie with Olymp Trade, and as usual, I'm going to take you through next week's main releases so that you know when and where to look for profitable trades. If you're not subscribed yet, go ahead and click on the red subscribe button and ring the bell so you don't miss anything new. And yes, of course, I do have something special for you guys. If you're ready, let's go. I think let's go ahead and start off by discussing some of the main events and what's going on in the world. Brent has dropped by more than 4% last week. There were some political issues in Libya and Iraq that disrupted output. And there's also an outbreak in China, a virus that has spooked the markets because it was Chinese Lunar Year, and there was a lot of travel and a lot of spending that goes with the holiday. So this is all bearish for oil, but we have mentioned before that it's not beneficial for the oil market to drop below $60 per barrel, which is going to be which will remain our support, and resistance is going to be around $70 per barrel. Another gainer from the virus spook is the classic safe haven Japanese yen. USD JPY dropped by almost a little bit less than 1% during last week, but has since recovered. On a daily time frame, support will be around 109 and resistance will be 110 and then 110.300. And since we're on the topic of safe havens, gold resistance remains around 1555 and support is going to be around 1450 per troy ounce. In the Eurozone last week, there was the monetary policy meeting. The rates were left unchanged. This was last Thursday. But the ECB president, Christine Lagarde's statement was perceived as somewhat dovish. She stated that low interest rates will remain in place for a prolonged period of time. The European economy is seeing some recovery. The economic sentiment has improved. German PMIs are also improving, and although Euro composite PMI slightly missed the targets last week, it remained unchanged and above the critical level of 50. This week we'll start off Monday at 9 a.m. GMT with the release on German IFO business climate. The forecast is of improvement, and at 3 p.m. there is also U.S. new home sales. I've mentioned before that new home sales are a good driver for the economy because they generate more spending. So the forecast is also to the upside. So in the morning, it's look for possible euro strength, and in the afternoon, United States dollar strength, of course, following the release. So for the classical euro US dollar on a daily time frame, resistance is going to be around 110,800, followed by 111, and then around 111,407. Support is in the area of 110,150, and then 110. So the British pound has also been on a recovery, and understandably so. The markets were previously pricing in around a 75% chance of a rate cut this week. But last week's data was upbeat. Employment and earnings were reported stable, and the previous claim and count change was revised down. This is good and bullish for the British pound. And manufacturing and services PMI were also above forecast. Now, this week for the British pound, the main release is going to be on Thursday, which is the Bank of England monetary policy. With the recent releases and Brexit the following day, monetary policy is probably going to be left unchanged. As usual, pay attention to the statement. GBP USD on a daily time frame, resistance is around 132, followed by 133. Support is around 1.29500. And now, so there are going to be several releases from the United States this week, so pay attention to pairs with the United States dollar. And we've already discussed the targets for the three main currency pairs, the Euro US dollar, GBP USD, and USD JPY. So on Tuesday at 1:30 p.m. GMT, we have U.S. Durable goods orders. This is a good way to gauge the health of the economy because durable goods are items that last for a long time, so items that last more than 3 years. And if there are orders that Then there are expectations for purchases. At 3 p.m., there is CB Consumer Confidence. The forecasts, both of them are to the upside, so bullish for the United States dollar. On Wednesday at 7 p.m., we have the FOMC, the U.S. Federal Open Market Committee, the Fed, however you prefer. So we have the release on United States monetary policy. President Donald Trump made a visit to Davos, Switzerland last week for the 50th World Economic Forum. And during his speech, of course, he didn't forget Jay Powell. You already know the story, raised too fast, lowered too slow. Anywho, the interest rate is likely to remain unchanged at the 1.75%. I know I keep repeating myself, but make sure and pay close attention to this statement. On Thursday, the 30th, we have United States GDP for the fourth quarter. Forecasts are to remain the same, around 2.1%. And the last release on this week's agenda will be the Canadian dollar with Canada's GDP for November. This will be on Friday the 31st at 1:30 p.m. GMT. The Canadian dollar dropped last week following a dovish statement from the Bank of Canada, although the rates were left unchanged for the time being at 1.75%. USD CAD experienced gains, which is in line with our last week's prediction, and USD CAD on a daily time frame continues to trade in a range between 130 and 1.34, which is going to be our respected resistance and support. Now, thank you everyone for tuning in. I hope this information will prove to be useful and profitable. To help boost your profit even more, use this promo code when you're making a deposit this week, anytime during the week from the 27th of January until the 2nd of February, and get plus 30% to any deposit amount. The promo code is ROAD and then the number 2. That's ROAD number 2. Give me a thumbs up. Make sure you guys are subscribed. Your comments are always welcome. And I will see you guys next time.